Hi everyone, my name is Khalil, and today I'll be explaining one of the most essential concepts in technical analysis: support and resistance. These levels appears in almost every market, stocks, crypto, fabrics, and once you understand them, price action starts to make a lot more sense. So let's talk about why I chose this topic. To be honest, I chose this topic because support and resistance, or SR, are literally the foundation of technical trading. Before indicators, before patterns, before strategies, you need to know where price is likely to react. This level shows us where buyers step in, where sellers take control, and where major moves often start. Once I learned about SR honestly, properly, price charts stop to look random and start looking structured. And I think every trader deserves the same look or the same view. So, what are support and resistance? So, let's break this down. Support is like a floor, a level where price tends to stop falling because buyers step in. And resistance is the ceiling, a level where price tends to stop rising because sellers takes control. What I love about this concept is how visual and intuitive it is. If price keeps bouncing from if the price keeps bouncing from the same zone, that is support, and if price keeps getting rejected at the same area, that is resistance. It's simple but incredibly powerful. So why these levels matter? These levels matter because the market constantly reacts around them. When the price reaches support, traders look for buying opportunities. When it hits resistance, they watch for selling pressure or reversal. And support and resistance help traders find better entry points, smarter exit points, clear stop loss levels, and confirmation of trends. So it's basically a roadmap for reading the market. And so let's talk about type of support and resistance. Not all SR looks the same. Sometimes you get horizontal level when the price taps the same number multiple times. Other times you have trend line support or resistance, where price follows an upward or downward diagonal slope. We also have moving average, which act as dynamic support and resistance. And finally, the one I called psychological level. Big round numbers like 100,000, 10,000, where traders naturally react. Well, by understanding all these variants, it helps you see SR everywhere, not just an obvious point. So let's see how traders identify SR levels. So how do traders actually find these levels? We usually start by looking for areas where prices bounce multiple times. Repeated touch means the level is meaningful. We also draw trend lines by connecting higher or lower heights. Round numbers, previous heights, and previous lows are also big clues. And if you see or use TradingView volume, tools can also show you where buyers and sellers are concentrated. And the more time price respect as level, the stronger that the level becomes. So let's talk about a real market example. So imagine a stock bouncing around 50 euros for most of 2019 and becomes your support. Then in 2020 it breaks above 70 euros. That's your breakout. Later the price drops again and suddenly the same 70 euros turn into resistance. This is called an SR flip. It happens all the time. So again, in 2022, the price finds support around 65 euros. And in 2023, it breaks resistance again and it continues higher. So basically, the simple timeline shows how SR can predict reversal, breakout, and 10 for continuation. Let's talk about something else, breakout and reversal. One of the reasons SR is so important is because it helps you stop the breakout and reversal. A breakout usually happens when price finally breaks through support or resistance with a strong momentum. This is usually leads to a new trend or a continuation of an old one. A reversal happens when the price hits the SR level and bounces back in the opposite direction. Traders love reversal because they often give low risk, high reward. So, by recognizing the difference between a real breakout and a fake one is a skill, but even noticing the reaction is already a big advantage. So, let's talk about how traders use the SR strategy in this slide. Basically, Most trading strategies include support and resistance, whether you realize it or not. For example, let's say trend takers use support in uptrends and resistance in downtrends. Breakout traders wait for the price to push through key levels. Swing traders focus on buying near support and selling near resistance. So let's say something else. Day traders uses the SR on a small time frame to plan intraday moves. Even algorithms and institutional traders uses SR. It's one of the few concepts that works across all the time. To conclude, support and resistance are one of the most important tools in technical analysis because they reveal market psychology. They tell us where buyers are confident and where sellers step in and where big moves might happen. And by learning to identify these levels, it helps you trade smarter, manage risk better, and understand price action with much, much more clarity. Thank you so much for listening to me, and I hope this gives you a stronger understanding of how markets move. I want to excuse about my English and maybe I misspelled some words. I just wish you understand some better.